Few investors understand the total cost of a mutual fund. You have tax, transactions, and all these sort of associated fees. So today we're going to learn a little bit more with Dylan Bond. He's the owner of Bond Financial Services. So mutual funds, they're popular, but they have some caveats and some fees that people don't necessarily understand.
Yeah, the bottom line, Seth, I've been in this business for 20 years now. And I've met with hundreds and hundreds of people for first appointments over that time. It's clear to me that I've never met anybody that truly understands the real cost of ownership in owning a mutual fund. And really what the misconception is a lot of people will do their research on the internet. They'll look up Morningstar. And they'll see an expense ratio disclosed of maybe 0.9%, which is the average stock mutual fund expense ratio out there. So when they see that, they think that is all it costs them to own that fund. But in all reality, there's a lot of other additional costs out there that people need to be aware of.
And the costs aren't necessarily documented. No one's trying to hide them, but they're not there.
Yeah, exactly. You know, the fact of the matter is mutual funds are a good tool for people starting out that don't have a lot of money to invest. But as they go through life and they accumulate six-figure type values in these funds, this is when they really need to pay attention to it. Because if you think about it, this Forbes article that we always reference, that we have the reprint rights to, the real cost of owning mutual funds, the article states that the average cost of owning a stock mutual fund is about 3.17% per year. So put that into dollars. For every $100,000 that somebody might have in mutual funds, they are potentially paying over $3,000 a year in fees. And I meet people all the time that have $500,000 plus, sometimes $1 million in mutual funds in their 401ks. And when you do the math on that, you're talking potentially $30,000 in expenses that they're not even aware they're paying.
And you also always say to try to diversify too, because you don't want to put all your eggs in one basket.
Right.
So it's imperative and important that we diversify and put money in different baskets so that we're always left with something.
Well, my feeling is this: it's okay to own them, but if you're going to own them, understand what you're actually paying for them, understand the costs out there. The expense ratio is one of about 5 different costs. Above and beyond that, there is something called transaction costs. And in that article, it states that the average stock mutual fund transaction costs are an additional 1.44% per year, which, again, that's above and beyond the expense ratio.
And then there's also tax costs, too.
Yeah, a tax cost. That's when you own mutual funds outside of an IRA or a tax-deferred account. If you buy a mutual fund with non-qualified money that owns highly appreciated stocks in it, and keep in mind, right now, we've seen the market go up almost 100% in the last 5 years. So if somebody buys into a mutual fund today with their money, they're buying into potentially some stock positions that have gone up immensely in the last 5 years. If the fund manager sells those stocks today, the person that bought into it this year with those non-qualified funds will have an exposure to pay the capital gains tax for the amount of shares that they own.
And these are things that I think the general public isn't as aware of.
They're not aware of it.
Cash drag and soft dollar costs. What are those?
Right. Well, so soft dollar cost really is, you know, that's a little bit more of a gray area. But in the article that we're talking about here, basically what it is that sometimes mutual funds will direct business to brokerage companies in exchange for research. But the brokerage companies that they're directing the business to might not be the most cost-effective transaction costs that are available out on the market. So these are costs that aren't really seen, but they need to be at least understood.
And there are advisory fees, too. Now, if people go to the seminars, they can reference this document. This is what we're talking about. And you have the rights to hand this out as a handout.
Yeah,
so
our Global Financial Private Capital, my registered investment advisor, has the reprint rights to this article. And we use it as a takeaway piece just to get people aware of what's going on out there. And if they want to talk to me and dig a little bit deeper, we have a financial planning department that can actually do the research and figure out the real cost of ownership in the funds that you own.
So people can get something like this at any of your seminars, and you have a lot coming up. You've got golf, you've got dinners.
We've got golf seminars coming up at the Orchards in Hadley, Twin Hills Country Club in Longmeadow. We've got dinner seminars coming up at Twin Hills Restaurant in Longmeadow, as well as Tucker's Restaurant in Southwick. So, you know, ultimately, if you're 50 and older and you have a good amount of assets invested in these types of vehicles, I recommend coming and sitting down and hearing what we have to say. Worst case scenario is you learn a little bit about it, you have a good dinner, and we part as friends.
I was going to say, worst case scenario, you have a tasty dinner, Dylan.
There you go.
It's a pleasure to have you here. And you can visit bondfinancialservices.net or call 413-754-4747. Just let Dylan and his staff take the steps to secure your financial future.